Hello and welcome to another update video about stacks. The STX chart has pushed into this resistance area, the first level on our Fibonacci scale here, $2.64, yeah, and got rejected there, which was the 100% extension level on the chart. So far, only 3 waves to the upside. So at the moment, due to the corrective pullback, it looks currently as if the price is in a wave 4 pullback, with one more high to complete in wave 5 of wave 1 in the yellow wave count. Then there could be a wave 2 afterwards, then a wave 3 to the upside, wave 4, wave 5. Sometimes, because we are in the heart of a third wave rally, we don't get any deep pullback. So it could be that after wave, maybe we don't even get a visible wave 2. That's a phenomenon that we sometimes see in crypto, and typically people get disappointed when that happens. I mean, you know, we don't control the market. Nobody knows. I just want to always emphasize that this can happen in crypto. It's not unusual. It happens here more often than, for example, in the stock market. Sometimes it's just, especially when we are in the main element or the heart of a third wave rally, pullbacks can be extremely shallow. It is typically then not wise to take too many profits too early, to reduce the position size too much. There are lots of other tactical aspects to this, and how to deal with this from a strategic trade management point of view. But if it follows an idea, and that doesn't mean we wouldn't get 5 waves. Well, we do get them, but they will be hidden in a massive green candle. All right. So I think it's reasonable still to watch for higher prices here on the STX chart. Explained in previous videos. So obviously that we probably had here an initial 1-2 setup already. The wave 2 that bottomed here in August 23. And it is reasonable to assume that this third wave reaches sort of the area around 834, maybe even higher. Looking at the subdivisions, yeah, the wave 1 of that here, third wave, circle wave 3 we're talking about actually. Wave 1 of circle wave 3 should reach 341, possibly, okay. Why? Because we only have 3 waves up. So in the primary scenario, as long as it's holding $2.01, 341 will be the next marker to watch. Doesn't mean it has to stop there, but the 61.8 Fibonacci extension level is a very common target for a wave 1 of a larger degree third wave. Okay, could also go a little higher. If it does, then we might be watching the area around the $4.10 level. But yeah, it seems like one more high is needed to complete this wave 1 of a larger third wave. If we do not get this one more high, and I think we should get it, then it's likely just a high B wave, a very, very high overshooting B wave, which happens sometimes in crypto. It would be very high though, so it's not my favorite interpretation. And the wave 2 would still be unfolding. That, as I said, is not my preferred interpretation. Why? First of all, because when we have a move like that and a breakout, I tend to give it the benefit of the doubt. Also, the wave 2 pullback landed in our support zone. It was a healthy wave 2, and now we see that rally, so it is safe. I mean, not safe to assume, but I prefer to assume that the third wave is now running, and within the third wave, obviously, we've got the 5 waves, and this is the wave 1, which again, as per the guideline or rule of fractals in Elliott wave, should also be a 5-wave pattern, and that means one more high is missing. The Elliott waves tell us, or the structure tells us, which Fibonacci levels we should use. This is the ideal support range for a fourth wave, $2.39 to $2.01. Could also go a little lower, doesn't need to go much lower. It's not a target range. Yes, normally a fourth wave retraces, in most cases, to the 38.2 retracement, so you might call it a target, but it's not really a target as I would give you an upside target in a bull run. It is simply support. And yes, typically these are reached, but bear in mind it's a counter trend move. You see overlapping price action typically suggests that we are heading higher in an uptrend, and this is simply a counter trend move. And because counter trend moves mean you work against the higher level trend, they sometimes just give up early, right? And the fifth wave starts a little earlier. But essentially, I'm not telling you it will go down that much. It's simply a support area. But yeah, it's worth watching these Fibonacci levels for potential reactions. Let me just double check if I've set them correctly. Yeah, maybe a little higher, but it's basically this $2.01 to $2.40, and down here we measure the distance of that third wave, and we know that a fourth wave would typically not retrace more than the 50% retracement of the third wave. So that's the key level. Anything below that will be too deep to be reliable, and we might have to assume that, yeah, indeed, the C wave to the downside is unfolding, might take us back into the larger support zone down there. But because of the overshooting B wave, the C wave might not end below A eventually. These ABC structures often are structured in a way that a C wave ends below A. But if we have an overshooting B wave, the C wave has plenty of space to develop and then doesn't sometimes need to come down to A anymore. It's a so-called running flat structure in this case, where the C wave just finishes a little early. That's what they tend to do when we have overshooting B waves, especially in a bullish market. So essentially, I'm giving you support here. We're in a bit of a range. So we've got the $2.01 level as the lower range boundary, and then upper range is 280, the breakout point, and then it should take us to $3 and what did we say? $3.41, $3.42 next. Then we take it from there. Okay, that's my update about stacks. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.